Good morning, everybody, and welcome to a Wednesday, the middle of the week, and not only the middle of the week, but the middle of OPEX week, and not only the middle of OPEX week, but the middle of quad witching OPEX, which, if you've never experienced an OPEX week before, or even recall a quad OPEX week, they are designed to absolutely obliterate those that are trading oversized in the very short term. And yesterday was a great example. But before I get onto that, and I am going to go on to a wider view, today, nothing, zero, voila, nil, nothing at all is on the schedule today. 7 o'clock, we get mortgage applications. Millennials aren't buying houses and boomers aren't selling houses because who in the fuck wants to pay 7%? Nothing on the schedule today. News just came out that Adidas warns of falling sales in North America as it continues to sell off Yeezy inventory. The guy's got the number one song in the world. I have no idea what it is, and everybody hates him. So anyway, on to your charts. Before we go on to that, actually, I'll go over here on the spreadsheets first. Nice range, 65-point range. A 57-point close above the open. That's the first one this year on a Tuesday. First one on a Tuesday, as Tuesdays, the greatest we had gotten was better than 14 points. And yesterday, I'm going to show you how not only you made money and you had the entire day off, but how OPEX, and more importantly, quad OPEX is here to bend you over as if you dropped the soap in a prison shower. SPX over on these spreads, all you guys that are in risk, you saw the reasons for the risk and you saw the benefit of the risk so that you've rolled over your risks. You see how it works out and why it is beneficial to be taking some of those. The safe guys, called you guys out middle afternoon, 5185, 5180s, as 5181, 53 was a safe edge. You barely missed that at the end of the day, but you got your 43%, $1.50. $1.50 or better. Didn't track it as we went into the end of the day, but that's what it was. And over onto the QQQ. Let's go here because I haven't fixed any of the artwork. Oh my God, I look so fucking embarrassing. Plus 1.5% day. Again, this was pretty simple to see from a wide view as the absolute OPEX fuckery was going on. And again, nothing special whatsoever that took place. Nothing at all. So we'll go on to here. On Monday, if you saw, I issued you the warning. Tuesday, March 12th warning. SPX2 red closes warning. Not looking good. We had our two red closes. We aren't minus 1%. We missed minus 1%. And again, just showing all the data how it is. Because we had closed down 2 consecutive sessions in a row, it was needing to be that you've got to be an adult about managing your March 15 puts positions ahead of CPI. Now, CPI was a miss. Market didn't care. And this was why yesterday I threw out your email, which is titled there, 32 Trades OPEX Weekly Candle Play, the SPX call credit spread. Throw it up there, see what it is, see what it's all about, and you'll understand why, again, these are beneficial. So I will go on to the charts, and we are going only zoomed in here on the SPX. You got your open yesterday, your nice little gap up, and immediately came down and not only filled the gap, but right there on your breach, which isn't actually a breach because these move, we came right down to the 10-day moving average. 8 minutes. Money made, 50, 60 puts going out to today from yesterday, $1.50 to $4. Everybody that got into a credit spread, they were all at 51.30, 51.35 was the lowest of the risk spreads. Done. Take your money. Go. 10-day moving average. Hello, 10-day moving average. We know this video game. We know how this thing works. Today you got the 10-day video, the 10-day moving average, and it said, hey guys, guess what? It's OPEX. And they rammed this bitch right up everybody's throat. Bam. 11 o'clock in the morning, we pretty much peaked. And you could see it on your Dow Jones names. Your Dow Jones being Microsoft, little bit there with Apple, Walmart, people shitting on the floor in Walmart, and Walmart goes up. Little bit of support out of there at NVIDIA. Like I said, Microsoft, you had some Google back up there. Nice rebound off of that 130 from last week. Apple making itself known. A little bit over on Caterpillar. A little bit over there on Home Depot. A little bit on McDonald's. And again, it was just all Dow names as the trannies were the ones that were in charge yesterday. So leaving you off here with the VIX and how we came right up to that 51.79. Sorry, with the SPX. Came right to that 51.80. I will bring you on to your VIX, and this is how we knew you were in trouble. As we were starting to breach here this 14.10 yesterday, we dropped it right down to 13.87, and we will widen this out so you can see what we're looking at. And again, having played along with the VIX for so long, you know what? We will go with the other one because that's right. We are on a VIX. We are just touching the 50-day moving average being OPEX week. We're just above that big 1339. 1410 needs to be recovered. And again, this is why you have your warnings like we had on Monday when we're up in that 16 level. So done with the VIX, moving on to your bigger, broader, wider view. And you're going to want to sit back and chill out here. So here's your SPX coming off the Israel invades Gaza low October 27th. And you can look at this in either of two ways. You can look at this as the bearish count, which all of us have. A, B, over here in November. Us coming right up here to the 123, 138 retreat or extension fits perfectly. 51.35 worked out very well, and then it failed. And now we're looking at 52.06 as a possibility. However, when you want to come on to the bullish view, which I can go back and redraw this all you want, you've got your coming off of your December lows, your 1, 2, 3, 4, and here we are into the 5, where your 5 tops out perfectly at the 200 extension at 51.75.71, which is where we have continued to fail when we have come up here only twice. But you can see, and you know, having been zoomed in here at your choppy resistance that we have been going on with for the better part of this month, really come back to, end of February when we first got up here into this plus 50 area, 50.80, 50 there with the big gap up that we had going back on February 22nd when NVIDIA recreated AI. C wave, 1, 2, 3, 4, 5 for the fifth wave. Bullish wave 4 coming down here into somewhere in this region of the 45, 4,400 area. All topped, all of it. Come on to your NASDAQ composite. And again, this is where it starts to get even more interesting for those of you who chart. Coming off of your October 27th Israel invades Gaza lows, your 1, 2, your 3, your 4, and here you are attempting to produce a 5, having just breached into, now get this, this is your 300 extension from your 1974 all-time lows to your dot-com highs down to your 2002 lows. That's your 300 extension. You're at the 261.8 extension right in the same place, which comes from your December of 2022 to your February of 2023, going down to your March of February 2023, this being where the top of the wave should wind up with. And then you come out here with your recent move coming off of the October 27th lows, and you've got your 100 broken, your 161, your 200 perfectly for your 3, Here's your 4, and you're right at the 261.8, and all of them are combined right into this little 30, 40 point range. And that's where we're at. 1, 2, 3, 4, 5. Look at it however you'd like to look at it, but we have come to an overextended topping zone, and I could get into the technical versions. What I'll just share it as images there in the email today. So then you come over to your Dow Jones, and your Dow Jones, again, looking at this and how I've discussed this for well over a year of it being a bearish production. Come off of your October of 2022 lows, and you've got your AB in red, where your C right now is right here to your 123.6 extension, right at 38,900. Just breached it. Come over and look at it from a different AB point of view. Oh, and I've got to make that move. With this being your A over here in July, that being your B in October, you're right at the 100 extension perfectly where your all-time highs just happened to put in right there in February. We are also exactly at plus 5% above the old all-time highs from 2021. Look at it from a zoomed in point of view, and it's all the same. You've got your 1, 2, your 3, and here you are with this extended dead bird flapping its wings, 5, waiting for a reason why for the better part of a month now as to why it should decline. That's what we're still sitting with. So there's your VIX. I will bring you over now onto your IWM. Again, IWM looked at from either different way that you want to look at it, from a bullish or a bearish view. Your A being over here into middle part of December, then your B with a very rare drop decline, and your C tops out here perfectly where your highs have hit right over at 209.45. Look at it from the bullish point of view, and your 1, 2, your 3 perfectly fit. Here was your 4, and here we are in a 1, 2, 3, 4, 5 having topped, but waiting for a catalyst to move it to the downside. I've shared IWM quite a few times, and again, on the clean version of the IWM, as you can see, you've just been coming up here into this failure zone. It failed eloquently as we went into the end of December, paid amazingly, and now we are up here into this. Well, guess what? There's a chance. There's a chance. There really is a chance. Your wave counts are your wave counts. We're waiting for a reason why, a catalyst as to why. And 1 week from today is your FOMC meeting. So I'll leave you off here with just some updates on what we've been discussing there in the room, like McDonald's. A couple of people have asked. We've traded McDonald's better part of 5 times, all on these plus 295 failure opens. 295, drop. 295, drop. New all-time highs as we came in here to January, and then the earnings came out the day after that, or the week after that, beginning of October. Once again, big drop. Playing it, playing it, playing it. Up here at 295, 299 last week, 2 weeks ago, 3 weeks ago, whatever it was when we talked about this again. And those of you who played it, 100, 150% you got on your trade, down to that 289, and here we are again at 295. My preference is to see this above 295, so that I can see a nice divergence as we're heading up to that 299. But you're running out of oil on the French fries for McDonald's, and you've undoubtedly got yourself a bearish looking ABC with a fake print down at 277, which is still unclaimed, going all the way back here to December. And guess what, guys? As you go into April, as you go into May, whatever the date is, you're going to be seeing that 277.33. Mark my words. Boeing. Here, I'll bring you in here on a 5-day view. Boeing, again, with all of these planes falling out of the sky. Like I talked about, with 185.71 being the break line, and finally got it yesterday after, fucking another plane dropping fuel and wheels and people with turbulence at 800 miles an hour. Boeing's fucked. And your Boeing is a much bigger picture, eating a big bag of dicks. And now any kind of bounce on Boeing is nothing but a new short to be taken, because 176 being your October lows is nothing. Where you're looking at over here is you're looking at that 165. That 165 is begging, and it doesn't take a rocket scientist to see the momentum that is pushing down for that 165. Just give it some time, because wider view, Boeing is fucked. And over here with the golden boy, the NVIDIA, the NVIDIA, yeah, NVIDIA, crypto. Hey, we're going higher again on Bitcoin. Every dip gets bought. Come on, guys, buy the dip. Enjoy yourselves on Wednesday, guys. I am not a crypto guy. I don't believe anything that NVIDIA has to say. It is going to be your Enron. It is going to be your WorldCom. It is going to be what they blame everything on when this thing goes down. And then when Donald Trump wins, you can buy anything that you want, hold it for a couple of years, and enjoy your life. See you guys in the chat room.